Hello, everyone, and welcome to today's episode of Microcap Mania. Today, I have a really interesting company to cover. We're going to be covering gambling.com. Gambling.com, for any of those who don't know what it is, it's kind of like the nerd wallet of gambling. So they don't actually operate any gambling website or anything, but they have different websites where they kind of embed links and promo codes to other gambling websites. So let's say you're looking up best online casinos or something like that. There's a strong chance you're going to go to a website that's owned by the gambling.com group. And as you're reading through, you'll see different ads, much like a nerd wallet, where if you were shopping credit cards or anything in that nature, you'd find multiple different links to different cards, and they'd each have their benefits listed and maybe even some promo codes. So quite similarly, we have gambling.com. And gambling.com is a really interesting thing to cover because for a while now I've been looking for a public company in the gambling space that we could potentially cover. And I'm not a huge fan of the DraftKings. I think that's primarily the large public one that you can actually invest in, just because in my generation people don't really use DraftKings. They use Prize Picks, and currently Prize Picks is private. But this is going to be a really interesting one to cover today. So really quick, we'll get the boring stuff out of the way first. But my name is Torrin Dove here on the Dove Financial channel. I go over different microcap stock analysis. I do up-to-date market news and really whatever I feel like. And of course, with this recommendation that I'm going to be making for gambling.com, whether that's a buy, sell, or hold recommendation for our actual portfolio, if anything sounds interesting to you and you really want to dig into this company or invest, please take the time to do your own due diligence, research it on your own. You can use this kind of like as a baseline or maybe just an idea brainstorm, but please don't go directly from hearing me pitch to investing, because for all you know, I could completely be making up numbers and everything like that. I'll be completely transparent as always. I've pulled all of these numbers off of Bloomberg Terminal, the company's annual reports they filed, and a lot of the slides are going to be from the actual investor presentations that gambling.com puts together. I like doing a lot of the slides from the actual company websites of whichever company I cover, because I think it gives an accurate idea of how they want to depict themselves to investors, and whether or not it's eye-catching or appealing to the investor, I think is also kind of part of the investment thesis in a way of how well that company actually describes its story and what its goals are. So without further ado, let's get right into gambling.com. Now, gambling.com was founded in 2006 by Charles Gillespie, who is the CEO, and he was joined by Kevin McChrystal, the Chief Operating Officer, in 2007. They're both graduates from UNC Charlotte, and they wanted to actually get straight into owning and operating a gambling company, but at the time in the United States, none of that was legal, so they actually went abroad over into Europe to actually open up their very first website, where they targeted offerings over in Asia. And then in 2010, they switched to its focus of online casinos in Western Europe for a long time, and that's primarily been the business model since the original founding of the company. However, after acquiring gambling.com, the domain in April 2011 for $2.5 million, they started trying to branch out from only Western Europe a bit, and so they also went into the United Kingdom and then eventually primarily into Ireland and other European markets. And then as we've kind of seen the adoption of more legalized gambling in North America, especially in the United States, they've also pivoted to targeting that a lot, and they obtained licenses and commenced operations in New Jersey. And then also last year, 2024, they were really excited because North Carolina also legalized gambling. And so they, since both of them were UNC Charlotte grads, and they actually got the first domains in Charlotte and kind of started their company there, they were really excited to bring an office back to North Carolina to be their primary United States focus. So again, gambling.com, as I've gone over a little bit, it's not a gambling website, it's a gambling marketing company that operates out of Jersey, not the state, but the country. Well, that's not really a country. It's a governing territory of the British Crown. That's not important. But the firm primarily operates in the United States and Ireland as of now, and it really acts as the middleman between gamblers and websites and casinos. So the company runs several websites such as gambling.com, bookies.com, casinos.com, RotoWire, and a significantly larger portion of websites that are like very, very targeted. So they'll be like Bet West Virginia or Bet Pennsylvania or Bet North Carolina, and they just have a like very wide range of websites. So any searches that you do like in a specific targeted area, you're highly likely to stumble upon a website owned and operated by gambling.com. So they offer 15 websites in 7 different languages that cover a wide range of gambling industries with sports, iGaming, and fantasy sports. Each website is tailored to a different audience of gamblers, and the websites also include newsletters, product reviews, comparisons, and then, of course, those embedded promos, which is where they're getting their money from. Additionally, the company has made a few acquisitions. They also target subscription services, and they actually ended up acquiring OddsJam and OddsHub, which really is kind of a different little bit of a service where you go onto their websites and you pay a subscription-based fee, and it kind of tracks all of the offerings from different gambling websites, including sports gambling and iGambling. And so let's say the examples I found when I tried to like mess around on their website a bit was it would track, like, let's say I wanted to do fantasy football. It would track all of the different offerings from like the prize picks or the underdogs or anything for parlays there, and kind of compare each of those. And then like if it saw arbitrage opportunities or thought something was mispriced, it would elude you and like point you in that direction. And a lot of people actually seem to try and use this to be better statistical gamblers and maybe break even into profits. Probably not. Gambling's very lucrative as a business model because not that many people do go positive, but it could potentially happen. Gambling.com, it works in a very, very high margin business, and it maintains a gross margin of around 94%. Currently, though, a large percentage of earnings for the company are going to debt repayments that mature in 2028. They have those through Wells Fargo, and a lot of that has basically fueled their acquisitions. They're not necessarily a serial acquirer, but in their space, they've continued to acquire different companies, especially in niches, and like I mentioned earlier, like any of the odds-related stuff, because they do want to see a pivot directly into some of those business models just so they can get a little bit more in terms of a portfolio going, specifically in gambling, besides the affiliate marketing specifically. But currently on that debt, it matures in 2028, and they still have around $151 million left to be repaid, which isn't necessarily a huge deal because over the past couple of years, they've generated well over $100 million in revenue, and as I said, their margins are incredible, so a lot of that is just going right back into repaying that debt. And so right now, it's not necessarily a lot of profits getting brought back down to shareholders, but I think as that debt matures and as the gambling industry as a whole continues to accelerate in growth, then we'll definitely see more profits going back towards shareholders. So in the last 4 years since going public in 2021, they have grown revenues at an average rate of 47%. Now, year over year. Now, obviously, that isn't going to maintain, and even last year, that dropped down to like 17% in the average, but I think somewhere around the 20%, 15 to 20% is a realistic goal for them to continue that growth, at least for a long while gambling still being ramped up and more states are legalizing gambling. So kind of quickly highlighting some of the 2024 highlights. As I mentioned earlier, it was a really exciting year for them. They sent 479,000 depositing customers to partners through their websites. The company was also very excited to see, again, North Carolina launch regulated sports betting, as the company dominated the share of voice through their websites and affiliates during that time. And the company also opened a new office in Charlotte, where they're going to be focusing primarily in the U.S. markets. Now, the company also again saw a jump in revenue of 17% year over year and $48.7 million in adjusted EBITDA, which marks a 33% increase from 2023. Also, free cash flow jumped an astounding 81% to $41.6 million. Now, additionally, in April, the company acquired freebets.com and its subsidiaries, and then the company also acquired Odds Holdings, which I've talked a little bit about, and that's kind of as they focus their direction towards offering more than just affiliate marketing. They want to actually sell these products to their customers. So again, they're very frequent in acquisitions. It's kind of exciting to see a business prioritize acquisitions that really expand their portfolio as instead of just taking cash and just pouring it into useless acquisitions. I kind of like where they're headed with this approach. It was really interesting to see just how some of these websites like odds, like the odds gambling stuff, how it would speak to consumers in terms of trying to price mismatch and trying to find which betting site had the best deal for this specific parlay. And people really looked at it like an investment, which I don't think is the most ethical thing in the world, but at the end of the day, people are going to gamble regardless or not, so you might as well take a slice of that. I can't stop people from overdoing gambling or anything like that, but I can certainly benefit from it. That might sound kind of bad to say, but that's the truth. Now, they're a very, very successful company in the affiliate marketing for gambling specifically. Here's a little look at some of the awards they've won through the years. Again, very, very exciting stuff from there. And then here's some more of the investment specific stuff. Currently, it trades at $11.83 per share. They have a market cap of $411 million. There's their sales compared to income, their book to share, cash to share, all that. Their PE ratio right now is 14.06, and historically this is actually pretty good for this company. Their price to sales is 3.23, price to book 3.34, price to free cash flow 11.73. The current and quick ratio aren't necessarily as good as I'd like to see, but that means they can fully cover any of their debts right now, and especially as they continue to grow as a company, which I really feel optimistic about, having looked into this industry a bit. I really think that those are going to get better over time. Now, their earnings per share growth over on the right side a little bit is pretty exciting to see overall. They have a lot of inside ownership, which is something I really like to see, because then the executive board prioritizes how can we both grow the share price and kind of do what's best for the shareholders, as well as just trying to make as much money as possible. They have a decent amount of institution ownership, which I really like to see. Their return on assets and return on equity is really exciting there. Their margins, again, are very, very good right now. Those profit margins and operating margins is they eliminate some of the debt and more the costliness of the business that's required to actually grow for them. I think those will shoot up over time. And I feel really good overall about this company. So where that kind of leads us is, does this earn a spot in the Microcap Mania portfolio? And so a lot of this thesis kind of broke down to a lot of executive interviews I saw, my own personal experience with the gambling industry a little bit, and just kind of watching that down. So from the statements I heard and kind of the prioritizing on where the growth is going to go, they really want to expand into adjacent products and services within the gambling industry. I really like that. Obviously, their affiliate marketing is probably going to be the number one segment in their company for a long, long time to come. But I really do like that they tried to prioritize, even in the acquisition of the odds boards and the odds specific things, that they want to be a well-rounded company. So they don't necessarily matter who wins the gambling race. It's not like a DraftKings where you're going to be competing against MGM casinos and Bet 365 and ESPN Bet. Instead, they kind of win, gambling.com kind of wins regardless of who is going to overtake market share, regardless of who's doing well. As long as the industry is doing well, I see a lot of benefit for gambling.com. I mean, even from a simple standpoint, if somebody like me in my generation doesn't necessarily have a lot of experience gambling, the first thing I would obviously do is look up like best casinos or best online things because there are so many different options. Whereas like also somebody in my generation, again, I keep bringing up the NerdWallet example, but best credit cards, which company has the best offerings, and having a company like casino.com where if you go on their website, it's very attractive. It's a very nice website. It's easy to navigate. There are like little columns and like news articles and things along with these embedded links, and the embedded links also give descriptions and they go over promos and everything like that. I think they have a really exciting business model. They aren't necessarily in the most competitive thing. Gambling specifically is very competitive because, again, it's a high margin business and high growth business, but is in terms of the affiliate marketing, they're doing pretty well against competitors. Speaking of competitors, I have a really funny story with this. So a lot of times I'll go onto Bloomberg Terminal and just kind of mess around, try and do ins and outs, see everything, and a lot of that is like peer comparison as well. And I just thought this was hilarious. So I went to peers, and one of the first things it brought up was Scholastic. Like the Scholastic Book Fair, like that. So just imagining like if I were 6 years old and getting sent to school and it's like, oh, okay, Torin, go, here's your money for the day, go buy a book you really like at your Scholastic Book Fair to go read. And then I just get there and I buy a book, and then in the back it's just bet 365 and a promo code or something. I just thought that was really funny that Scholastic comes up as like a peer comparison. But anyways, moving back into that, for their peers specifically in affiliate marketing for gambling, they're actually like very, very competitive, and they trade at a pretty good valuation compared to competitors. Now again, also in the emphasized growth strategies, they really want to continue their growth in North America as more states in the United States and provinces in Canada legalize gambling. I really like that. And then they also want to pursue growing markets such as South America, which they're seeing a lot of success with growing into specifically gambling online. And I really like that overall. I think I definitely see the value in an investment like this inside of a Microcap Mania portfolio. I tend to align in kind of insight with some of their executive board like interviews I saw, and a lot of like where they want to take the direction of the company, because specifically in my age group, what I've noticed is everyone is gambling. Now, that's obviously a little bit of an exaggeration, but I have been absolutely shocked at how many kids my age, despite not having a lot of money because we're in college, will set aside their money for Prize Picks every week, or will text me out of the blue and ask opinions on different sports betting things. I myself have tried a couple times on like a Prize Picks, just throwing it in on some UFC action and having some fun, but I've definitely noticed even on Instagram Reels, if you're a male in like the probably 17 to 28 range, Instagram Reels targets you nonstop with like Kirko or Stake and all of the like online casino games. I'm constantly seeing like the ball drop one, or people playing like the plane thing, or I'm not necessarily like super in that space where I like gamble, but there are a lot of people my age who either gamble actively or they're getting bombarded on social media about gambling just because it's so profitable for these companies. And I definitely see there being a lot of growth. I mean, even late last year, we saw gambling, like sports betting for the first time, outpace the amount of people who were putting in money on sports betting compared to investments. And I definitely think there are real opportunities there that I can absolutely capitalize. I mean, it's not the most exciting thing in the world to see my generation just throw money after money into specifically sports betting and gambling. But again, as I've mentioned earlier, I can't stop them. Like, there's no point in trying to. I'm not going to try and stop somebody's free will in the same way where tobacco companies make a great investment if you're a dividend investor. So at the end of the day, compared to what their competitors offer and kind of where they fit in the gambling space, I really like gambling.com as an investment because, as I've said repeatedly and will say again, it does not matter who is on top of the gambling space for gambling.com to do well. They're able to send over customers. They're going to be very, very easy for a marketing budget for any of these big companies who are looking to get more registered players and more players who will spend money. And I think in terms of like how they're going about targeting these consumers and customers, it's in a very smart way. Like they have a portfolio where you can get news, you can read up on all these different casinos. They have like, again, newsletters, they have odds built into the system. They'll try and tell you, okay, this bet that you want to place here currently is mispriced on this different website. And so I think that's going to be a way that even if a gambling company doesn't partner with gambling.com, they're going to lose market share because those players will be convinced to jump ship to a different platform if there's an arbitrage opportunity. And so I really see the need for a gambling.com in the same way you see a booking.com for hotels or a Nerd Wallet for credit cards and anything financial. I see this being a company that's going to last and definitely explode over the next 3 to 5 years. Even if we go straight into a recession, I have been shocked at the amount that like what I would consider people with very low amounts of money, again, college students who haven't been able to work jobs, have prioritized gambling to the point of I've watched kids like give up meals to save money for gambling, which is, again, not great. I can't do anything about that. I might as well make money off of it. So, thank you for tuning into this episode of Microcap Mania. I'm looking at potentially adding like 2 or so shares of gambling.com. We'll specifically see on the day. It might go up to 3, but I really think somewhere around the 5% portfolio allocation for gambling.com. Just because it's a growth company, yes, and it's a very explosive growth company, but its valuation is almost towards a value company outside of the debt. Like that is the overhanging thing that keeps it as a growth stock and not a value stock is the debt. But for valuation wise, they trade at a very, very reasonable value, and I think they definitely fit into the landscape really well. So, thank you.